Welcome to the True Knowledge Podcast Show with Atticus. True Knowledge is a podcast interviewing the most interesting experts in the world. Without further ado, here is your host.
Today we'll have Dr. Thomas Simpson. With 30 years of career with the Board of Governors of the Federal Reserve System in Washington, D.C., he's an expert in the area of monetary policy, economic forecasting, and financial markets. Today we're going to talk about the current U.S. economy and the trade war. Welcome. Thank you for being here. Sweet. I kind of want to ask you about the current economic condition.
Sure.
Yeah. Can you give us an update?
Okay. Well, the U.S. economy is this month going to be setting a record for the longest expansion in recorded U.S. economic history. And it had gotten some life about a year and a half or so ago. The economy had slowed down. People were a little worried about maybe a recession. But then it seemed to pick up some. Most recently, the evidence is that it's slowing down. Now, some people are looking at things like the yield curve and are pointing to a nearly inverted, or depending on how you measure it, an inverted yield curve.
It was inverted at one point.
It was.
Yeah.
Now, the most common measure of the yield curve is the 10-year less the 2-year, and that has not really inverted. It's gotten close, but it hasn't. But I don't think we want to get into a lot of minutia on that. I don't think the yield curve is a foolproof predictor of recessions. I think this expansion still has some life in it, but I think there are some uncertainties now that are hanging over spending decisions, particularly by businesses. And so I think we're going to see a string of weaker numbers, not numbers that would suggest we're in a recession. But one of the interesting things from the standpoint of my former employer, the Federal Reserve Board, is whether they're going to have to lower interest rates in order to keep the expansion going. And I'm sure they'll move fairly promptly if the evidence suggests that they need to lower interest rates to keep it going. But the irony is that just 6 months ago, they had raised interest rates, and we're talking about several additional increases over the next couple of years. That projection came off the table earlier this year, and now the statements that are being made by officials suggest that they might actually be lowering rates the next time they make a change. So I think the economy is going to continue expanding, but not at the pace that it has. And when it comes to the jobs market, it has been so robust.
Yeah.
And there really aren't a whole lot of workers other than the new entrants to the labor force.
Right.
But the people who have been on the sidelines have, for the most part, been drawn back into the labor force.
Very low unemployment rate.
Right. So we saw, in terms of the May data, a substantial slowdown in terms of employment growth. And I think that probably overstated the slowdown. I don't think, when all is said and done, I don't think we're at a point where 75,000 per month job gains is going to be the norm. I think it'll be above that, at least for a while, but we can't expect 200,000 per month like we were getting before with things that's taught in the labor market, and just the lack of a fresh supply of new workers, or actually people coming from non-employment status to deciding to return to the labor force.
Did it worry you that it has been the longest running expansion?
No, there have been theories in economics that point to business cycles having kind of a maximum length, that there are various factors that contribute to the downturn in the economy. But I think for the most part, those particular theories have not been borne out. And I don't think it's necessary that we have a recession soon. I mean, we'll have a recession at some point, and who knows what's going to drive the recession. It could be an oil price shock.
Do you have any predictions, or do you have any indicators that you use to decide the yield curve?
I don't rely heavily on the yield curve myself. I look at it among other things, but I would say that the things that I look at in particular are the fundamentals that affect business and household spending.
Can you go more into that?
Sure. If we take the household sector, for example, things that tend to drive decisions are jobs, the availability of jobs. And that's been very healthy, so that's a positive factor. Interest rates are another thing, and interest rates have been very low. They have had a few runs where they've been going up, but not to terribly high levels, but then they back off as they have most recently. So interest rates are favorable.
Do you worry that since interest rates are really low, if the next recession happens, the Fed can't lower anymore?
Well, that is a concern, and I don't want to question the Fed's judgment on this issue, because I mean the zero on the federal funds rate is as low as they want to go, and so.
Do you think it's ever a possibility that you would go to a negative interest rate?
At this point, the Fed is not inclined to do that. What they are inclined to do instead is to ramp up their asset purchases as they did before, because when we were in the early stages of the recession during the financial crisis in 2008, the Fed's balance sheet was at that time about $900 billion. They ramped it up substantially. So at one point it was $4.5 trillion. So it was 5 times its previous size. And that undoubtedly had a favorable effect in terms of putting additional downward pressure on long-term interest rates, which are more important than short-term interest rates.
Right.
So I think the Fed has concluded, and I'm in agreement with them, that they have a better tool in terms of large-scale asset purchases if necessary. So they now have over 2 percentage points that they could lower the federal funds rate before they would have to reverse themselves in terms of the asset purchases. They had been running off assets. They were planning to end that runoff at the end of September of this year. And if necessary, they've said that they would reverse themselves. So I suspect that they will continue to let their assets run off through September, then they'll stabilize them. And perhaps the next move on their part will be to buy additional assets. So negative interest rates, while they've been tried in Japan, they've been tried in Europe. I don't think there are certain problems that are unique to the United States that make it more difficult for the Fed to pursue negative interest rates here.
What are these problems?
Well, the problems to a very large extent are related to money market mutual funds, and they have fees that they need to cover. And so when interest rates get very, very low, they've actually cut into their fees, their management fees. And the question is, how long is that sustainable and for them to be viable? So I think if interest rates were to short-term interest rates were to become negative, their first act would be to, in order not to have to lower the interest rate further that their customers are getting, they would reduce their management fees. But it's not clear that's a very sustainable action. And I think there's also a worry that at some point they would have to go negative in terms of the interest rates that their customers would be getting, and that there would be other investments that their customers would go to. So it would have some disruptive effects in the money market.
Right. So their incentives are interesting.
Yeah. So I mean, there are various reasons why the Fed has said, really, basically, we think we can deal with the zero lower bound without having to go below zero on the federal funds, right? So, and I think you're right.
So, what were the effects for Japan once it hit negative interest rates?
Well, I mean, it passed. A lot of that got passed through to borrowing costs and interest rates that savers were getting very, very low.
Yeah.
This was not particularly favorable because Japan has, much more so than the United States, an aging population.
Yes.
So you've got a lot of people who now are living on fixed income, supplementing that with their returns on assets. And when getting a negative interest rate or very low interest rate, that's going to constrain spending. So it did not have a terribly favorable effect in terms of aggregate demand in Japan. Japan has been, from the late 1990s, has been just kind of languishing.
Stagnating.
Yeah. Mm-hmm.
Well, what are your thoughts on the current Phillips curve with inflation?
Well,
the
right.
low
I mean,
unemployment
all the evidence is that the Phillips curve has become very, very flat. The Phillips curve, and that's explainable by the very low inflation environment we've been in, and the low and fairly stable by historical standards inflation situation that we've been experiencing now for roughly 15 years, and actually a little bit more than that. And so in those circumstances, I think people have gotten used to low inflation. Expectations are low. And in those circumstances, you can get a flattening of the Phillips curve. We know that if you have high inflation, and particularly volatile inflation, the Phillips curve gets extremely steep. And so your variations in inflation at that point have very little impact on output and employment or unemployment. And so when that process is unwound, as it was many decades ago, and you get inflation stability, then you're going to get a situation where you get considerable movements in unemployment without any big impact on inflation. But it's been very favorable to the Fed up till now, because the Fed has, to the extent that they believe the Phillips curve is going to remain fairly flat, they can take some risks in terms of overstimulating the economy and not have to worry about it showing through in terms of inflation picking up quickly. And so that's been helpful for the economy and keeping output and employment high. But it's a double-edged sword as well, and that is if inflation were to creep up at a time when the Phillips curve was fairly stable, it might take a huge increase in unemployment in order to bring inflation back. And, I mean, I worked at the Federal Reserve during the worst inflation experience we've had. And at a time when there was no credibility. The Fed had, for over a decade, been saying we're going to lower inflation when inflation just kept going up. And so people didn't believe anything that the Fed said. And so finally, in October of 1979, Paul Volcker decided to, and he got support within the Federal Open Market Committee to hit the brakes and to bring inflation down. And it was a very successful policy in the sense that it brought inflation down. It set the table for what we've experienced since that time. It was successful in that regard. But the consequence was massive unemployment. Right. The unemployment rate shot up to above 10%. And there was a lot of misery out there while the economy was going through this process of disinflation until inflation got down to more tolerable rates. So we never want to get into that situation where inflation is particularly substantially above where anybody would like it to be.
Well, he must not have been very favorable with that current president at that time.
Well, the president was President Reagan. Well, actually, when he initiated the action, it was President Carter. And the Carter administration thinks that they thought at the time that Volcker was an important reason why they didn't get reelected.
Right. Different line incentives.
Right. But I think President Reagan understood that he was not going to have a very good economy to work with unless inflation was brought down. And so he was very guarded in terms of his comments. Now, for him, it was early in his administration. In fact, he was elected president while the Fed was in this tightening mode, 79, 80, 81, up to 82. He was inaugurated in 81, and then the Fed reversed itself about a year and a half or so after that. So, and he was very careful about not criticizing the Fed during that period. And I think realizing that this was going to work and that it was going to be good for him in terms of the kind of economy he was trying to achieve. So it all worked out very well for him. And inflation never really picked up during his presidency, and it gave him more latitude in terms of other policies he wanted to pursue. But I think the current president he has a different perspective on things, and I don't think hasn't displayed the same degree of patience that President Reagan had back in the Volcker period.
Right. And the Fed has to be independent from the government.
Oh, it has to be. Yeah. If it's
not,
not,
trust in.
Right. I mean, it's legally independent, but that doesn't mean that it's independent. It could bow to political pressure from the White House. And I think in the markets today, there's a lot of watching the Fed in terms of, is the Fed succumbing to the political pressure?
Right.
And the Fed is trying to convey to the markets, we are independent, we're going to remain independent, and whatever we do is going to be in the best interest of achieving our dual mandate of maximum employment and stable prices. And but there is this tension. I mean, particularly if the rhetoric gets more intense and more frequent, is the Fed going to continue to
move towards the next election?
Right. And I think, at this point, as I mentioned, we're in the process of a slowdown. I mean, the second quarter of this year, maybe only 1.5% growth, in contrast to a little over 3%.
Do you think this is just the effect of an older economy?
The slowdown?
The slowdown. So I
think the slowdown, I think there are two things. One is that households are more cautious. The fundamentals are good.
Okay.
Wealth is high. Stock market is very, very high. Home prices have recovered, and so wealth in the form of home equity is strong. And so that's favorable. The jobs market is favorable. Credit is available. Interest rates are low. The fundamentals are very favorable to consumer spending, but yet saving has been pretty high, historically high, and I think that's indicative of caution that people don't want to stick their necks out too far. And you read all the stories about student debt and whatnot, and the difficulties that younger people are having.
Right.
As they're going into the labor market, having difficulty putting the resources together to buy a home and so forth. So there's a lot of kind of negative commentary too. But having been through a very, very severe recession, that I think consumers have just decided, I think I'd rather be on the safe side at this point. So I think that's as it were, a headwind. Also, businesses, the conditions for businesses are also quite favorable. Credit is readily available. The stock market is strong, so if they want to issue equity, they get financing by issuing equity. The tax cut that was enacted a couple of years ago, a year and a half ago, it was particularly favorable to business investment. The reduction in the corporate profits tax raised the rate of return substantially on investment, but businesses have been very reluctant to undertake new investment. And I think there's something out there that's causing caution. If you read the anecdotal commentary, a lot of it has to do with trade policy. Yes. And they want to see how things sort themselves out before making any major commitments. So I think that's the biggest headwind at this point that's facing the economy. And the Fed, for a while, in terms of its public statements, and including speeches by officials, was very careful not to emphasize trade policy. But I think as time goes on and it becomes more and more evident that something really is happening here that is causing business caution, the Fed is pointing to this more and more. So, and I think that I thought from the beginning that this was going to have an adverse effect. So that means then that to keep the economy rolling, it's going to take a lower level of interest rates than had been contemplated before. If this was not hanging over the economy, investment spending would be more robust, maybe consumer spending a little bit more robust as well. And that would be causing the economy to grow perhaps too rapidly from the standpoint of ultimately achieving price stability. And the Fed would have been in a tightening mode, but that's not where we are now. And I think the major cloud is the trade policy.
War.
Yeah.
So I'm a little worried. How do you think individual household will not survive, but handle the next slowdown or recession?
Well, I think to some extent their cautious spending behavior is going to position themselves better. They're going to have more resources. And the next slowdown, the real question is going to be how severe will the next slowdown be?
Do you have any ideas what's going to cause it?
No, I mean, usually there are shocks that the nature of shocks is you don't know that they're going to hit and what magnitude they're going to hit. But
there's a lot of worry with financial markets, right? Trying to chase after these high returns. So the 2008 market crash was mortgage-backed security and things like that, and now they're packaging personal debt, individualized debt, as security selling, and a lot of people worry that's going to be
Right, but I think it's the whole securitization process back in the mid 2000s, leading up to the financial crisis, it got the market got carried away and overdid it. I mean, particularly in terms of mortgage-backed securities, where the underlying mortgages were subprime mortgages. The market learned something from that. Whether they learned enough or not is another issue.
But do you worry about like the Glass-Steagall Act was repealed?
No, I don't think that. I think that's been so-called red herring.
Interesting.
I don't think that the repeal of Glass-Steagall, I mean, underwriting securities and making markets in securities has not proven to be a serious risk factor. Potentially it could be. And I mean, in concept, you may want to take that type of risk out of a commercial bank.
Yes.
But historically, and even during the 2007, 2008 financial crisis, it wasn't, with a few exceptions, it was not the underwriting activity that was the main driver. So I think that, I think Glass-Steagall and there was the Volcker rule that came along. That was an attempt to kind of take things back to where they had been before. I don't think that. I think that's misguided. There are other things that are more important. And I think at this point, low interest rates have encouraged a very high degree of corporate borrowing. And a lot of this has just been to kind of repair balance sheets and to be able, and for corporations to have the capacity to expand when the opportunities seem better.
To the rise. Wow.
So I don't see a financial crisis in the making at this particular point. I think with regards to a lot of the consumer debt that has been securitized, with the exception of subprime auto loans, where there have been some securitization of those loans, there's, I think, a problem. But the real question is who owns that? And to the extent you don't have major financial institutions owning it, and I think we can take a bursting of that. If there's a bubble there, we can absorb the bursting of the bubble without any serious.
Do you foresee any other bubble that's forming within the economy?
No, not at this point. There are a couple of sectors where problems are going to emerge, but they'll be manageable. I mean, one is in energy exploration and drilling, where a lot of firms of various types that have been involved in this have borrowed heavily from commercial banks, and now with we've got another decline in oil prices, and so there's going to be some difficulty there. There had been a concern too that in the area of commercial real estate, that there had been over lending, and that there would be some stress in that sector, and I think there is to some degree, but it's been pretty mild. I think the full extent of the problem will be something, again, that will be manageable. At this point.
Kind of want to talk. I kind of want to go through the whole economy a little, just to make sure, because I think there's a lot of fear of recession coming up, a lot of rhetorics and stuff like that. I was talking to a Chinese businessman. He said this. So I'm sure you're aware that recently there was a lot of IPO that was filed that didn't go so well. So like Uber and Lyft.
Right.
And he said that United States investors really focus on market cap, right? How many people they can get on a certain app or customer they can get. Where Chinese sectors or Chinese investor only cares about returns on money. Do you have a worry that a lot of individual investors were investing be, I guess, so heavily on market shares instead of return for companies like Uber and Lyft?
I don't get a sense that they're. That as you pointed out, the pricing did not go very well for them. But I think those were more valuation mistakes that were made by the investment banks that were working with them to bring those to market. And it was a time when, there is this cloud that we've been talking about hanging over the economy. It's hanging over the stock market too.
Yes.
So the timing, I think, was not the best. But I think investors, by and large, are looking for returns.
Yeah.
And whether it's U.S. investors or Chinese investors.
Well, so let's talk more about the trade war. What's your thoughts on that? Do you think has been effective?
Well, we're in the midst of it at this point. There's been a minor victory with regards to Mexico.
Yeah.
And there, that was basically an unprecedented use of trade policy to deal with basically kind of a foreign policy related issue. The issue, the main problem at this point is with China.
Yeah.
And just about everyone agrees that China's trade policies and practices, more than policies as practices, need to change. Particularly intellectual property rights. And so, and this is a problem that's been around for a very long period of time, and no one really wanted to seriously address it in the past. And I think to an important extent, there was a concern about rocking the boat with regards to China. China's in the process of transition, moving more to a market economy. Eventually, China's going to become a democracy, and then they'll join the League of Nations and
OECD,
and be a responsible citizens and all of that. So just let's just wait for all of this to happen, and it hasn't happened yet. And whether China will ever be the democracy as we normally think of it, and when that might happen is another issue. But I think maybe a lot of this was wishful thinking on the part of the U.S. and other nations. And the problem, particularly with regards to intellectual property, has just gotten bigger. And so the question is, do you ignore it or do you confront it? And this president has decided that, that was much of what he was campaigning on, was facing China and confronting them and getting a reworking of their trade policies and practices. So we're in the midst of all of this. And I think that...
Has there ever been a time like this before in history? and how did it play out? I'm really interested in how history repeats itself. So trying to see these trends.
Not where the issues were the same. I mean, we had misguided trade policies in the 1930s, so-called Smoot-Hawley, where we raised tariffs substantially and other countries retaliated, and we just kind of, we'd shot ourselves in the foot and made a bad situation. It was already bad because of the credit crunch, the credit crisis that was going on. And then we compounded it with trade policy. But that was, there wasn't a particular single player there that was the object of attention, like China.
Okay. Yeah.
So I'm not aware of anything that's in any way comparable to what we're experiencing today.
So looking at the numbers, what do you think the outcome is going to be? Because recently he said that if it doesn't go well in the G20 meet, tariffs will go up.
He's going to raise tariffs more. I think right now China's trying to figure out, is this guy going to get reelected or not? And I think it's too early to tell.
So what are the possible outcomes?
Well, I think that if the Chinese leaders believe that Trump will not be reelected and that they're going to get somebody who's going to be much more accommodative, then they'll say, okay, it's going to be tough, but we'll ride this one out. On the other hand, if they think there's a good chance that the Trump presidency will continue for another term, and that they're going to have 4 more years of having to deal with them, I think they're likely to negotiate. So I think they're going to have to come to a conclusion at some point in terms of whether they believe he's going to be reelected or not. If not, then they'll wait till the next president comes in, and then they'll expect the next president to soften the stance, right, to reverse a lot of this. But if they're convinced that Trump is going to be reelected, I think they're going to say, well, we're just making lives more miserable for our public and for ourselves.
Right.
And
do you see any country that's outside the trade war that's really benefiting from the trade war?
Well, I think there are some Asian nations that can replicate production of what China's been producing and have been getting more and more production that previously was conducted in China. So I think there may be some benefits. They're not they're not talking. And I think once I suspect that if the Chinese conclude that Trump is going to be, there's a good chance Trump will get reelected, then I think they'll, there's got to be a face-saving way. China more so than any other country.
Very much so. Especially the rise of strong leaders in countries,
right. But I mean, China always, has been very sensitive to its image. I mean, China is the middle kingdom. I mean, it's, in terms of the Chinese characters, middle kingdom. And so it's a center, the perspective of center of the universe. And so the middle kingdom doesn't bow to anybody else. So you can't, you can't be placed in a position where you're perceived to be in that, because that's very humiliating, more so for China than any other country. So I think there has to be a good face-saving way. Now, trade policy is part of it, but also there's North Korea, and that's linked into these trade negotiations. It's not mentioned very often. but it's very much a part of
Can you
these
go more in details
negotiations.
about?
Well, China is the patron of North Korea. If China is not supportive of the regime's done for. And if China would basically back off its support, saying, you have to sit down and negotiate with Trump on a deal that is going to result in denuclearization of the Korean Peninsula. You have to do that. Then the leaders are going to have no alternative but to do it. If they believe China is going to pull the plug on them, if they don't, then they will.
I want to look at the incentives for both. It's kind of interesting, right? Because it seems like North Korea, in order for them to have a say in the world place, they're almost forced to go forward with nuclear plants and such. And with China, I think the concern is that if North Korea does break down, all the people is going to flood into South Korea and China. And then they have taken all these people that's maybe not high technology workers, right? Like
China may be at a point where they would look forward to lower skilled workers.
But do you think that would
but I don't. Yeah, I don't think China would overall welcome a disruption in North Korea. But I think what Trump is offering, and I think right now one of the sticking points is that Kim Jong-un he doesn't trust Trump, and Trump's saying, I'm not seeking regime change. And so I think he's trying to feel things out a little bit. And meanwhile, China's not putting a lot of pressure on them to negotiate. So I think that's things have kind of stalled out for that reason. But I think what the Trump administration is trying to do in terms of negotiation with China is say, okay, stop supporting these guys. You know that the safety of China would be improved if we got all those nukes out of the Korean Peninsula. That there would be fewer threats to you. So it's ultimately in your best interest.
I don't think China is worried about North Korea nuking China.
No, I don't think that's it. But there's instability there, and who knows whose hands those would get into if there was a regime change. Even a coup that was just fomented from inside. So, I think there are those just concerns that when you've got nukes and you don't know whose hand is on the trigger, that you may be vulnerable, particularly if they're that close to you.
Right.
So, and at this particular point, I think China likes North Korea to be dependent on them. And I mean, there would be, if North Korea went along with what Trump is proposing, which is basically free up the economy, we'll get American investment, we'll get Western investment to come in there, technology transfer, and all of that. And in 5 years, we'll have your economy soaring.
Like South Korea.
Right, yeah.
Why do you think he didn't take the deal?
Well, I think at this point, I don't think he trusts Trump.
I see.
I don't think Trump is saying this is what we'll do.
Yeah, but he might just
the only card I have in my hand is the threat of nukes, and I'm making progress in terms of delivery systems. So I don't know how long it's going to be before I'm going to be able to really have a stronger hand in this regard. So, on the one hand, I can, particularly if China is putting pressure on them, I can please.
They can please.
I can please my overlords in China, and then we can have an economy that is doing very well. And if there's no regime change, then I can be presiding over this. And my father and grandfather, and they were They had a different mindset, but now I could be the liberator of the economy. I could be, a great leader in North Korea. So there are some upsides here, but I think that probably he doesn't fully trust. Certainly doesn't fully trust Trump's promise, and I think in addition he probably doesn't fully appreciate what people are saying about if you move to a market economy, it's going to invigorate North Korea. That market economies do this. I think when you come from kind of Marxist thinking,
Yes.
you don't have an appreciation for markets and how markets work, and so you're very skeptical about whether a market economy really would turn things around.
I'm really interested in talking about this idea of the trust economy. So I think right now we're in the attention economy, right? So companies are trying to get our attention with certain technology. And essentially, if you view the minutes of your life you spend on reading books, or watching TV, or going for a walk, right, as a certain a form of currency, so attention currency. So if you're on the computer, you're spending essentially money in form of currency as time. Right, but I think was that as apps get more into manipulative with color psychology and psychology to capture our attention, and I think a lot of even just all these gurus are coming up and a lot of people are life coach and stuff. I think a lot of mistrust been building, right? So I think the next step of the economy is really, and I've tried to talk to other professors about this, and it's kind of hard to put a number on it, right? Because I think something that's missing in the economy is like trust between individuals, right? That can lower transaction cost. Should have a number, but I don't know much about it. But I'm really interested in your thoughts on this. Like, just like for instance, the dictator of North Korea, right? He doesn't trust Trump, right? So ultimately you can almost put a currency on that, and how do you formulate trust in this more global economy? I think even with trade wars, you really erode certain trust, especially with what happened with Mexico, right? Like they had agreement, a trade deal, and then arises tariff, right? So even though it didn't happen, you still erode a trust.
Oh, sure. Every time you threaten something like that undermines.
Right. So there has to be some type of consequence that comes from
You're absolutely right. There always are consequences.
It's just not immediate.
Right. And oftentimes, it's not only not immediate, but oftentimes it's hard to pinpoint in terms of its effects. Its effects are there, but they're not. You can't calibrate them easily.
Right.
So I think so much of relationships, whether it's normal economic relationships, whether it's geopolitical relationships, trust is a very important factor. And once you undermine or weaken trust, then there are going to be consequences, and it usually takes a long time to restore, to rebuild that. And so, but being able to trace the impact and say, here's exactly the impact in terms of how our relationship has gone, how our economy has gone. It's very difficult to do.
Definitely. Yeah.
But we know that's part of human behavior.
Right.
So if you influence human behavior, there are going to be implications.
I do worry that being the trust economy being another black swan event.
Well, it could be. But I mean, this aspect of trust has been, it's not something new, maybe.
Right.
It's taken on a different form, but, this has been, as long as there have been human beings, there's been the issue of trust.
Right. I guess one idea that's playing in my head is that normally we think people behave, or even countries behave in their best interest. But maybe if the trust economy plays out, something else, maybe like honor or faith, will be more significant than monetary value, right? And that can change how the game is played in a certain way. It'd be harder to predict other people's behavior if they don't behave purely based on monetary. Like maybe if they don't care about the trade wars, they know they can just ended, but because of the face value, maybe there's certain trust that was broken. It can be centuries ago and things like that.
Yeah, but if you undermine trust in terms of someone you're dealing with in some capacity, then there are going to be consequences for you. So you need to take that, regardless of the context, you have to take that into consideration in terms of your own decision.
What do you think the consequences of these trade wars and stuff is going to... So one aspect is that the trust economy, but another aspect is it just seems like when there's economic wars, is whoever, in my mind, I'm thinking about whichever side loses is when their people are really upset with the high unemployment rate or inflation and things like that, right? So which economy can sustain the damage that lasts, the one that wins, right? From the data, what do you see between the trade war?
Well, for one thing, this is affecting China, and at a time when they really are not in the best position to absorb this kind of impact. But it could be that there will be a further escalation here, and it could very well be that in time things will get resolved, and that I think China at some point is going to have to agree with the rest of the world that yes, we're going to play by the same rules that everybody else is playing by.
Right.
So I think that's going to happen at some point. The question is, how soon is it going to happen? But if we go through a period of trade war where there's a lot of disruption, a lot of uncertainty about further disruption, in those, it could very well be that once things are sorted through and settled. Now the question is going to be too, what kind of mechanism is going to be in place for arbitrating when there are trade disputes? Is there going to be an impartial, effective arbiter? Is it going to be through a multilateral trade organization like we have now, or is it going to be more on a bilateral basis? And that's where the Trump administration has broken from its predecessors.
I see.
Is that in the past we've been willing to basically delegate sovereignty to the World Trade Organization. And the Trump administration is saying, well, those are a bunch of international bureaucrats. They don't care about America.
Right.
We want to have more control over our own destiny. So we like the idea of bilateral arrangements. And so then the question is, what kind of mechanism will be there to adjudicate when invariably there are going to be disputes. And, and probably on both sides of the agreement. But so that's going to be an important part of it. And also, I think that sometimes when you've been through a painful period like that, there's a desire not to go back to it. And so, let's just try to play by the rules. Everybody said, let's try to play by the rules, and let's just not trigger problems.
Another trade war.
Right.
Yeah. Once the bilateral is set up.
Right. So you could, even though you're going in a new direction in terms of trade disputes. And it's not just a new direction, but you're really following through on rhetoric, which hadn't been done before. You might think, well, this is going to be a tool that's going to be used more actively in the future. And that may be the case, but there's also usually when people have been through something they didn't enjoy, they try to avoid triggering that.
But do you worry about retaliation? Maybe if the bilateral is established, China just waits until its economy can handle another trade war, right? since there's no
Yeah, I
mediator.
don't know. My guess is that once they've negotiated a deal that they seem to be satisfied with, that they're not going to. I don't think they'll want to go back. I wouldn't rule it out completely, but I don't think so.
It doesn't seem like the trade war is really affecting people in the States. It's affecting businesses definitely, but not an individual in a very individual.
We haven't seen it yet.
We haven't seen it yet.
Yeah.
One thing that's really on my mind is this rise of fake information, fake news, and the Russian news attack and things like that, right? By targeting certain groups. For me, it's almost like, well, maybe they're not going to win. If China and Russia is together, we'll have certain aligned agenda. Maybe they're not going to win the trade war, but I'm always thinking about where it seems like the fall of certain empires, right? It's when there's a lot of poverty and people get outraged, like the Occupy Wall Street and stuff like that. And as we know, inequality is growing because how much people earn in the amount of capital investment earning compared to the labor has been different. Do you foresee any events like that happening again, such as like the Occupy Wall Street? Because I'm really seeing like it might just be a tipping point, right, before all these things builds up, or maybe there's certain like a deep fake or any of these fake information really to pushes the American people.
Yeah, well, I think when you take a look at the Occupy Wall Street movement, this was really kind of in the throes and in the immediate aftermath of the financial crisis. The economy got hit hard.
Yeah.
Job market was a mess.
Right. A lot of recent graduates, a lot of debt.
Right,
Jobs,
and you could point your own personal situation. You could link to the state of the economy, which everybody said was linked to the financial crisis,
right.
and there was a.
Do you think that's
that is particularly political issues where people are really trying to exploit this, which a lot of candidates are trying to do. So if it gets traction, then I think you could find manifestations of it like the Occupy Wall Street. So we haven't moved from the politics of division. As long as that's there,
right.
There's always the chance that there's going to be anger directed towards people who are in the financial sector, which has been doing very well. The tech sector has done extremely well too. So people, when it comes to high skills, they've done very, very well.
Yes.
Silicon Valley has done extremely well.
But so I think a lot of college students' concern is that United States is technology focused, right? So if you have a high skill labor, you're favored in the market, right? But to get that high skill, right, you have a lot of college student debt and things like that. And you can't bankrupt on that. You can't file bankruptcy. And if that does blow up, right? Because if you think about if the next slowdown happens, that people can't find job and a lot of people have college debt and stuff, who do you think is going to underwrite all these debt?
Going forward, who's
Going
going to
forward,
provide it? Well, it all depends on public policy, whether public policy would guarantee it or in some way encourage lending for educational purposes. So, if it turns out that students are having, or former students are having real difficulties servicing their debt, particularly because of the state of the economy, and that affects the willingness to lend, then, the real question is how will the political system respond to that? If the political system says, well, we need to make sure that students are are able to
put in the
pursue
work.
their interests and
Yeah.
so forth, then we'll come up with policy. The question is how well designed will be that policy. So anytime you're introducing a policy of providing some kind of guarantees and providing financing at favorable terms, there's the moral hazard, that
Yes.
problem that creeps in. And there's danger in terms of public policy being misguided. And ultimately, if the taxpayer is underwriting that debt,
Yeah.
then there's the prospect that there may be some big losses that will be absorbed by the taxpayers rather
Yes.
than creditors.
Right. Do you worry about that?
At this point, I mean, no one, right now that the talk is free university education.
Right.
And I mean, that's going to pose its own set of problems,
Yes.
Financing problems, but it's not going to work. That would not work through the financial system per se, only indirectly.
Right. Do you worry also, if the public does eat up its debt, so it seems like, right now the US is carrying a lot of debt, do you think, it seems like, we don't really have to pay off right away, and it seems like it's just like each administration is kicking the can down the road of paying back the
You're talking about the federal fiscal situation.
Yeah.
You're absolutely right.
What do you think?
This administration, as
Yeah.
much as its predecessor.
Right. Well, humans are very present bias, right? So
Right, and I mean the perception on the part of the public is that that's a problem for somebody else.
yes, nothing
Okay.
bad has happened.
Right.
Right. What do you think the possible outcomes are?
Well, the outcome is it's inexorable. I mean, we have the problem, looking at the problem going forward, it's entitlement programs. It's things like Medicare
Right.
and other healthcare policies and Social Security.
Right.
Those are promises that
Yes.
have been made.
Right. But if taken away, it's going to take a lot of trust out of
It is,
Population,
and the real issue is, when government makes promises to its citizens, and then it can't honor that. I mean, there's a dilemma there. There's a moral dilemma, and then, as you pointed out, there are trust considerations as
Right.
well. But when you take a look at the options that are available for dealing with this,
I have a question. So there's a little sidetrack. Do you think having that much debt will cause certain effects with the world reserve currency? Undermine the trust.
in time, yeah, because I think, I mean, there's the risk of default is going to go
Yes.
up. Nobody's really focused. The markets are not focused,
Yes.
and there are analysts,
Right.
think tanks and whatnot, and international organizations that keep sounding the note that we've got a problem here
Yes.
that needs to be addressed. That's not going away. You can't just turn your back on it. Now is the better time to solve it or to get to work on a resolution and waiting until the real disaster occurs down the
Right.
road. But it's not getting any traction in the political sphere.
Right.
And
Because it's not in their best favor to start solving this problem, right? Because you have to cut back on government spending and things like
right.
that.
I mean, that's what has to. I mean, you put your finger on it. But you can talk about raising taxes, but
Yeah.
that has only limited scope because
Yes.
that you end up really slowing down the economy.
Yes.
So it's raising taxes and we're learning more and more in terms of economic research that raising taxes really has, particularly when it's perceived to be a permanent increase in taxes, really has very, very powerful, lasting adverse impact.
I see.
So-
you go more in details on that.
Well, it's just from the standpoint of demand, people, you don't have as much money to spend yourself,
Right.
and you're projecting
In
that
the
it's going to
future.
be that way in the future. So, when it comes to going out and buying a new car or maybe getting a bigger house for your family.
So would that drive up savings?
Well, I mean, to some extent, that's what you would be
But it does
saving
cut
is
down
going to taxes.
Disposable income, yeah.
It would probably, on net, it would probably reduce savings.
Right.
And to the extent that people see that government is going to provide for them in the future, they don't have to save as much themselves. So,
Sure.
so raising taxes is not an alternative. Even thinking of seriously about defaulting on the debt is not. I mean, that is a painful way of dealing with it. In other words, just saying we're not going to pay it or we're going to renegotiate, because there the trust factor comes in full force, and then you're going to have a real hard time getting financing. And it's going to happen at a time when you're already spending more than you're collecting in the way of taxes.
Right.
So that means that we've been able to borrow the difference. Markets have been willing to provide the difference between what we collect in taxes and what we spend. But once you default, that you can't go to the market. So that means that spending has to drop abruptly and move into alignment with taxes, and that's going to be painful. So
But that would be a really good time if China's yuan wants to enter in the market and try to become the world reserve currency.
Well, it could, but there again, it's going to be trust, and what kind of regime does China have?
Yeah,
and
how stable is there?
Right. Yeah. So.
What's the best
There's no natural, at this moment, there's no natural alternative to the U.S. as the world reserve currency.
Right.
But, as we've been talking about, we're a decade or a decade and a half away from really serious problems in terms of unsustainable deficits.
Right.
Okay? And at some point, the markets are going to see this problem as not being addressed.
Yes.
And there's going to be a crisis. I mean, my own prediction is that there will be a major crisis in terms of the debt market, particularly the market for U.S. Treasury debt. And that's going to capture the attention of Congress and whatever administration is in power at that time, and they're going to have to deal with it. Yeah.
But then they have a lot more to deal with.
They're going to have a much bigger problem to deal with.
It seems like you would not get dealt with until you become big enough problem where.
I think that's right. Yeah. I mean, to the extent.
So let's talk about the fallout. What are the possible fallouts if the U.S.
Well, I think what's going to happen is they're going to raise taxes, and that's going to be unwise. But that's going to be
one of the solutions.
That's going to be because they're going to cut.
Yeah.
They're going to cut entitlement programs.
Right.
Because they just can't afford them.
So that's one option they would face.
Right, but they're going to say, okay, well, we're hitting hard the beneficiaries of the entitlement.
Yes.
So we're imposing pain there.
Yeah.
So we've got to impose pain on taxpayers too.
Yeah.
So they'll raise taxes
to ease the pain.
Well, I mean, they'll say, well, we have, it's a different group of people, and so
would you transfer it to?
Yeah, we're gonna, since we've imposed pain on the entitlement beneficiaries, we're going to impose pain on those currently in the workforce, who are earning income and paying taxes.
Yeah. They'll very much slow down the U.S. economy.
They will.
And also,
will. I mean,
it would drive a certain frustration, right, from the people that's working during that time.
Right.
They're getting taxed more.
Right. But I mean, take the best illustration of this is Greece.
Mm-hmm.
Okay. Greece, for a very long time, was living beyond its means.
Mm-hmm.
When it joined the euro, when it became a member of the euro area, that was viewed by investors as kind of a good housekeeping seal of approval on Greek debt. And so the credit markets were very willing to absorb Greek debt. Now, there was a little bit of disillusionment there too. I mean, well, they were fudging the numbers. Okay, so then the fiscal situation was worse than than any of the data, official data, were telling us. But there was this period when the markets were quite eager to acquire Greek debt, and then it became much more clear that this was an unsustainable situation. And so, but at that point, debt had gotten so great that it really took draconian measures to be able to deal with the problem. And Greece has been they were declining for a number of years, their economy. They've been in stagnation or maybe just mild increases now, but they're nowhere near in terms of the standard of living where they were before. There has been pain. They've raised taxes. They've cut back on call it entitlement programs, or various programs that the public have become very dependent on. And there's been a lot of pain and anguish over there.
And other countries don't want to take on debt anymore.
Right. But that's a foretaste of what we're going to be experiencing here in the United States once we get to a similar point.
Do you have any prediction how many years or how?
Well, it's going to happen, as I mentioned before, 10 to 15 years. Right, yeah. And it could happen sooner than that.
What do you recommend individual investors or people to hedge against this?
Well, you're going to want to have
you're hedging
assets. Well, you're going to want to have sufficient assets, to be able to, particularly people in their retirement years, are going to, they're not going to have the resources that they were counting on. So maybe now, if you're already a retiree, and you maybe need to be cautious about drawing down your assets so you've got more available. If you're approaching retirement age, now is the time to start boosting your saving, cut back on your consumption. I think from the standpoint of people who are making career decisions, you have to realize that among the options you're considering, those that are going to be paying more are going to also, you have to consider the tax rates are going to be higher too. Yeah. So those are the kinds of things that
essentially a form of inflation on your income.
Well, it has a similar effect. You just don't have the same command over resources that you were counting on.
So this is interesting, right? Because it seems to me it's almost like a new way of brain game. And here's how I construct this idea, right? It seems that you carry on so much student loan debt, and it makes it so you can't really go to another country and work and things like that, right? So you really trap high knowledge workers within the States that maybe if they decide to go to Europe or Canada or somewhere else, right? When that 10 to 15 years does come, they'll be better off because they'll be making more and things like that with lower taxes.
Well, it all depends on what happens in those other jurisdictions. Because they're facing many of the same problems we are.
Right.
Some of them are dealing with them more effectively than others.
Yeah. It's interesting because China carries a lot of U.S. debt. It's like a double-edged sword.
Right.
Yeah.
Right.
So if he does default, it's going to hurt them as well.
Right.
Yeah.
Right. China, that's been a byproduct of their currency policy. They're not acquiring it like they were before, but when they had an undervalued currency, they were acquiring dollars and using the dollars to buy treasury debt.
Right. What happens if they just buy the bullet? What happens if they just buy the bullet and if the U.S. just default its debt? Or if they know that it's going to collapse, they just all right,
Well, what would be the implications for China, or how could China complicate?
What will be the implication for China?
Well,
if
China
they
would, undoubtedly, if the U.S. ever defaulted, they would renegotiate the debt. Mm-hmm. So you wouldn't lose 100 cents on the dollar.
Right.
You'd lose maybe 30 or 40%, 40 cents on the dollar. So you'd still have some value there, but not as much as you had.
But that would affect future investment.
Sure.
Yeah.
Now, if the U.S. defaulted, it would be hard to be able to get other governments willing to invest in treasury securities like
Yeah.
we have before.
But also other form of investments, business investments, and things like that.
Yeah, I mean they would be looking at what are
Other
the risks
places, yeah.
of so you had, for example, the European Central Bank that for a period of time was buying corporate debt rather than buying sovereign debt. So rather than buying Italian debt or French debt, they were buying corporate debt. So they considered the risk to be more favorable when it came to corporate debt than some of the sovereign debt. So it's possible that going into the future where a lot of countries are going to be facing these problems and default will be undoubtedly selected by some, that you'll find that there will be private debt that will look more attractive than sovereign debt. I mean, it's hard to imagine because our mindset is sovereign debt is the safest.
What countries do you think is going to do really well if the United States will, 10 to 15 years later on? It seems like Australia's economy is doing really well.
Well, those that have younger populations, I think, and those that have not been so aggressive in terms of entitlement programs are going to be, they're going to be in a much better situation than those like the U.S. that have taken on. And in Europe too, I mean, they've got massive entitlement programs, and the demographics in Europe are similar to those of the U.S.
And as healthcare gets better, people live longer as well.
They'll live longer, but
incur more costs as well as last few years of your life, healthcare-wise.
Right, but then if that's the case, then I mean you're going to be, maybe the cost of providing health care to the covered population will be lower through, if there are improvements in health care. But on the other hand, if
there's a technology boost.
But if you're providing retirement benefits and people live longer, then there's a huge cost associated with that.
Right. What countries do you think is gonna be doing really well? I already asked this question, but can you name some countries that would? So one thing I realized is that, I've been studying is that the very wealthy are buying up second or third passports as a way of investment. Because through my research, the United States and one other country in Africa are the only two countries in the world where you pay a citizen tax. And it's funny because in the other country, I can't pronounce the name, but the country in Africa, if you don't pay the citizen tax, they actually kidnap your relatives and hold them for ransom.
Oh.
Yeah. So what the rich, not invest, but these people are realizing that if they default or I guess get a different citizenship, they're able to. At other countries, seems like you have to stay at a place more than 51% of the time for you to pay income tax. So they will have 2 or 3 places around the world in different countries, right? So nowadays you can, if you give a country so much money or start a business, hire so many people, you can get a passport like Macedonia and stuff like that. And they're buying up these ways as a way to avoid income tax. So, what do you think about those strategy that the very wealthy are having these opportunities or?
Well, yeah, I mean, that's one of the things that wealth will buy is opportunities that aren't available to others. But in terms of parts of the world that might do well, you had asked that question. I think Eastern Europe, I think, will do reasonably well. I think Asia, many parts of Asia will do well. There are parts of Africa.
So it seems like those areas also suck up a lot of investment, foreign investment.
Well, yeah, I mean, and
they're doing well.
Right. I mean, that's a good indication that there are good investment opportunities.
Right.
And that those economies, have good potential. So, I mean, those are places where I don't, where I think to the extent that they are moving towards market economies. And I mean, you find countries in Africa, have Uganda and Kenya, South Africa to a lesser extent,
China's putting a lot of money there.
and Ghana, and there are a number that have really moved very much in the direction of market economies, and their economies are thriving and will continue to thrive. So, and they have not built the entitlement system. They haven't built all of that structure that's going to be so burdensome for the U.S. and for other parts of the world. So, under those circumstances, they're going to do relatively well. Whether they'll do as well as the U.S. and China and some other countries, during their heyday, is another issue.
Typically, developing countries grow a lot faster.
They do. Yeah.
They do grow
They've
a lot
got a lot
faster.
of catching up to do.
Yeah.
Mm-hmm.
How do you think that's going to affect the world dynamic in terms of power?
Well, it's going to be shifting away from. It's already shifting away from Europe. I mean, Europe, which was the powerhouse a century ago, now is not much of a force in terms of geopolitical power. And China's getting much stronger in this regard. The U.S. is struggling to kind of hold its own, but
what do you think about Canada?
Canada's relatively small. I don't see Canada's, and they've got natural resources, but not enough there to.
But do you think they would be stable enough?
Canada could very well fare a little better than the U.S., but Canada is vulnerable to many of the same problems as the U.S. So, Mexico, interestingly, is probably going to be in a better position a couple of decades down the road than the U.S.
Economically, fascinating.
Yeah. But, a lot of it is going to depend on whether they embrace markets, and they continue to, open up their economies. If they do, market economies are amazingly powerful. Now, they rely on trust.
Yes.
Something we've been talking about. If you don't have trust, then you're not going to do as well.
Yeah.
But if you've got something like a rule of law, and people are confident that the rules aren't going to be changing overnight, and people have a lot of freedom to make decisions, the end result is, we just see, look at North versus South Korea. Just difference between night and day.
Right.
And you can see it. You saw it in Europe during the Soviet era when the East Germany and West Germany. West Germany was thriving. East Germany was languishing, and East Germany was the crown jewel of the whole Soviet empire. So the evidence has become very, very evident that market economies, when you've got the right kind of legal infrastructure in place, and fairly stable political system, that just they just roar.
Right.
Whether the outcome is always the outcome you want is another matter. But if you want a high average standard of living, market economies will provide that. So these countries that we've been talking about, that might be the showcases a couple of decades down the road, they're going to be ones that have embraced market principles and are going to rely on that.
Wow, very much so. Thank you.
Mm-hmm.
Yeah, thank you. Appreciate it.
Sure.
I know. Take up some of your time.
Okay.
I really appreciate it.
Yeah.
But that's interesting. I'm trying to figure out, right? Because what countries do you think has a lot of accumulated social trust or a trust among the economy, like they have been carrying good level of debt or paying their debt on time, that during times of uncertainty, countries will invest more flood to those countries to avoid uncertainty or defaulting?
Well, the country I'm going to point out is not really in that mix is Japan. Japan has a lot of debt to GDP, and they've been able to handle it pretty well. And I think it's been owned internally, and so I think there's a sense in which the Japanese public has placed an awful lot of trust in their government. And
very interesting culture.
And
of
the
trust.
promise that their government
Will
has
take care
provided.
of them.
So again, I think Asia has so much potential here for a variety of reasons. And,
Are there any countries in Asia you feel that you will grow a lot faster?
Well, I think
Well, you
countries like Thailand, and I don't think that these are going to be super economic engines, but they're going to do well.
Yeah. But they do have political problems.
They do have political problems, but they have a way. They've had a way, and there have been coups, and but they've been relatively stable, and I think they have the potential for being even more so. Malaysia, they've had their problems too, involving trust and investing public resources. Indonesia, I'm not so sure about Indonesia, but South Korea is going to continue to do well. And obviously Singapore, but Singapore is so small.
Yeah.
And it's not clear how much more they can squeeze out of that.
Right. Wow. It's interesting because I keep thinking about how to hedge against the future.
Yeah. And Philippines to a certain extent, although there are some political problems that need to be sorted out.
Right. Wow. Thank you.
Mm-hmm.
Yeah. Yeah. So I'm about to, I'll turn this off. So.
Well, anyhow, in 1988, I was invited to be a visiting professor at the People's University in Beijing, which, if you know anything about People's University, it's what I would call the party school, but not in the sense of the party school in the U.S., like Chapel Hill or UVA. This is where the party officials sent their children. What I discovered was that I was in Beijing for 4 weeks, maybe 4.5 weeks. And on weekends, I wanted to visit different places. And so a few of the weekends, I was able to hire a car and a driver to take me to places that I couldn't get to easily in town. And as it turns out, there was an assistant professor of finance at the People's University whose father was a retired military officer. So he and this fellow's mother lived in a military compound as retirees. And that military unit was looking for ways of earning more money. And so what they would do is they would provide transportation services for people who were willing to pay for it. So it turned out to be reasonably priced. And so I would have in those days, it was something like $20 a day that I would pay. Plus, I would have to pay for lunch for the driver. But oftentimes the driver would bring a friend. And so they would ask, well,
Interesting.
Yeah. I want my friend to have lunch too. I said, okay, that's fine. So, and these were usually very young people. I would guess that usually the soldier who was driving the car was 18 or maybe 19 years old. His friend would be the same age. And the car was a Russian car. So I always thought it was ironic that here was this American capitalist who was being driven around in a Chinese military car by a Chinese soldier. And it was it was a Chinese military car, but it was Russian built.
And their incentive to drive for you because of capitalism.
Right. I mean,
Yeah.
they were making extra
They were
money.
making extra
Right,
money.
Right.
Wow.
Yeah. They knew where they could earn extra money. So, but one thing I noticed about China when I was there, and every time I've been back, I don't know, 6 or 7 times. But the energy that you just see all around you in China. In 1988, I was staying in a hotel compound. It was actually built by the Russians, and it was big and had quite a few different buildings, including a dining hall, and then it had a wall around the hotel compound. But it was close to People's University where I was teaching, so I could walk there in 10 minutes. But anyhow, just I would look out from my hotel room, and during the week when the sun came up, I would see construction, buildings going up, and in China, the scaffolding that they use for construction is bamboo. I mean, you know,
Right.
people here, I mean, have can't have any concept of, you know, bamboo scaffolding.
Right.
Is that really safe? But I would notice that as soon as the sun came out, I would see on these projects, these buildings that were going up, there were people out there working, and they were working hard. And then I'd be finished with the day. I'd be back in my hotel room before dinner. It was getting dark. I'd look out, and there they were, still working. So that was, you know, maybe from 7:30 in the morning till maybe 7 o'clock at night. And who knows when they started and when they finished. So you get to Saturday. And same thing. Get to Sunday.
Well, I think it's understanding that, you know, on the classical model, the only two things that grows the economy is, you know, labor and capital and technology, right? And maybe they didn't have so great of technology, but they really doubled down on the other factors that played into it.
Right.
I kind of want to, what do you think, what country or where in the area in the world do you think the next technology accelerator is going to come from? Or what do you think it's going to be?
I don't think it's going to be Europe. I don't think it's going to be Japan. I think the United States is still very well positioned. There are lots of things that encourage technological development that the U.S. is still very and will continue to be very well positioned for. I don't think you can discount China. I think there's something about Chinese cultural and interests that are very compatible with technological development. I think Korea, particularly South Korea. You know, Russia, in many respects, they have a lot of people who have good technical training, but they've not been able to leverage that. And
why not?
I don't see it happening in Russia like some of these other places. I mean, one of the interesting places that really is in the vanguard now is Israel. I mean, this little country where, you know, you've got highly motivated, very well educated
population
people, and this suits them very, very well. So, you know, when you have those kinds of ingredients, and there's something about the Asian culture that really values education and training and hard work and creativity. And so, if not the U.S., it's going to come from Asia.
I'm interested to see what it's going to be. Next printing press. Next, it's going to accelerate the global economy. Awesome. Thank you.